Jonathan, we're just getting our own inflation numbers, which are already very weak. It's deflation at the wholesale price number of minus 2.4. Just hang in there, Jonathan, for just a minute. We'll go through the important news that's hitting the markets. It's minus 2.4. So this will mean that once again rate cut expectations will open in the Indian market. Yesterday we got a fairly bad food inflation number, but with a combination of a poor WPI wholesale number, which was always expected, and a probably less expected Iranian deal as early as today, maybe the scope will once again open up for rate cuts. Well, we'll keep that in view. We'll get more domestic experts on the WPI inflation, as well as the news, breaking news about crude. We'll have Gaurav Kapur of RBS and Rupa Rege of L&T Finance joining us in just a minute. But Jonathan, just to get back to you on that point, how much of barrels did you say is waiting to come into the market if the deal is signed?
We actually feel that there is of supply. There's between 20 and 30 million barrels. Now, depending on how that was addressed in the sanctions, will then determine how much quickly that supply will actually come onto the market.
What is this 2030? Is it already refined and stored and ready to hit the market? Or is it the capacity of the country to process in a year?
Well, that's what we're led to believe, that there is a stockpile ready to go to the market. And that's what we're trying to understand as to what was actually put together within the agreement as to whether or not Iran will look to sell that in order to meet the US dollars or the currency that they need. Remember, Iran is in a state where it does need dollars, it does need cash, it needs income. So that store could go to the market quite quickly unless it's been addressed within the notes, the sanction notes.
Oh, okay. Well, let's just get to our experts as well. Rupa and Gaurav Kapur are with us. Gaurav, what have you made of both this minus 2.4 number, which the WPI has announced, and the accompanying news that the Iran-US nuclear US deal has been signed, and Iran will hopefully be able to supply its oil into the market? Do you think together this throws a different picture on incoming inflation numbers?
Well, Lata, I think the Iran deal issue clearly is a big positive from India's perspective, because the impact it can have on oil prices, further dampening down of oil prices and its impact subsequently on inflation. On the WPI number, it's actually as expected. So there's, but the thing to note there is that the momentum to my mind, I think the momentum in the index numbers has been picking up. So momentum on wholesale inflation has been picking up over the last couple of months, and I think that has continued. Perhaps most of it is coming from food, but to the extent we see commodity prices globally now, oil and on the back of weakness in China, a general correction in commodity prices downwards further, I think that would open up space for easing at some stage, depending on how the monsoons also pan out. So I think at this stage this is a development which is positive. But I think at the other side, there are also developments which are, from a rates perspective, are still somewhat negative. You've seen monsoons being patchy in the first half of July. You've seen the Greece situation, while a deal has been reached, the situation is still quite fluid. And the Fed sometime into September,
Gaurav,
I think we'll get a clearer sense.
Gaurav, just hang in there. I wanted to just read out the other numbers that have come in on the WPI. The all commodities index, of course, is minus 2.4%. Month on month, it has risen by just about 0.5%. Food articles have risen by 1.34% month on month. That was akin to what we got in the CPI, where food prices went up by about 2% month on month. Year on year, of course, it has dropped to just 2.8. Within the food basket, the month-on-month increase has been maximum in vegetables, where there is a 13.5% rise, and next to that is pulses, which have shown an 8.7% or nearly a 9% rise. Within vegetables itself, it's onions that have shown the maximum rise of 14%, 14.1%. But it's manufactured products that we should look at. Fortunately, manufactured products month on month is not a fall. Last time we had even that. Now the month on month in manufactured products is more or less flat. and year on year it has fallen by 0.7%. So this is what, the 6th or 7th continuous month that we are seeing inflation in negative terrain. And in manufactured products, I think this is the 4th month that we are seeing products fall on a year-on-year basis. Within the manufacturing space, the month-on-month prices have fallen maximum in metals, which is a fairly heavy item. It's fallen by minus 0.6, fallen by 0.6%. Sorry, that was non-metallic minerals. Metals have fallen by almost 2%. Month on month, year on year, it is a 5% fall. So metals, and that is to be expected since it's landed metals from China, which were quoting lower after the problems in stock market problems in that country. So we did expect to see a lower metal number, but it's a 2% fall month on month, 5% fall year on year in metal products. Iron and semis, ditto. It's actually there, a 10% fall year on year. That's really the story of manufactured products. Flat prices month on month, and year on year a fall of 0.7%. That's really the WPI number. Let's invite Kumar and Rupa also into this conversation. Kumar, that is Kumar Rachapudi, the senior rate strategist Asia at ANZ Research, has joined us. Kumar, good afternoon to you. What did you make of this number? And I want your view on the Iranian news as well. Are you expecting now that everywhere we are going to see a bigger drop in prices?
Good afternoon. I think first things first, the WPI number is as expected, and I guess what plays on the minds of the markets is the CPI number, which came out slightly higher than expectations yesterday. So the market, as one could see in the bond market reaction today, has taken out some expectations of near-term rate cuts. Will the Iranian deal impact Indian markets? Yes, of course, it will definitely impact the Indian markets in a positive way in the medium term. But will this lead to the markets pricing in a rate cut in the August meeting? Probably not. So we'll probably see the market expecting a rate cut in the months ahead rather than the next month itself. And much of it will depend upon how the monsoons pan out, and most importantly, how food inflation ultimately ends up in the next few months.
Rupa,
so if the food inflation number is lower, then yes.
Okay. Rupa, comment on this. Food inflation has gone up by 1.3% on a month-on-month basis. Even the trends in CPI were disappointing on the food part. What would you forecast going forward on food inflation? Should we now, get ready to expect higher prices?
Certainly, because if you look at the disaggregated picture, inflationary spikes are primarily coming from vegetable prices, where a lot of seasonality is involved, but also from protein-related items and edible oils. Of course, government is proactively trying to import more of these commodities and create stocks. But history tells us that, the food economy suffers maximum because of the protein-rich items and vegetables during, this season, if monsoon rainfall is suboptimal. So I think currently we are facing a lot of uncertainty, and that is also getting reflected in the futures prices of some of these items. So yes, we have to keep our fingers crossed so far as the food inflation trajectory is concerned.
But do you think the argument will prevail on the Reserve Bank that you've got this Iranian deal now? It's the news is almost filtering through that it's a done deal. It is bound to have an impact on crude prices, one would think, even more than what it's already had. Given that, and given this very poor WPI numbers, you think the space opens up, if not in August, for at least a September cut?
Well, currently it's very difficult to take a call because RBI has been very, very clear in its analysis and assessment. They would certainly, revisit their stance only after they are able to assess in a realistic fashion the monsoon performance, both in terms of quantum as well as distribution. And I don't think, August will be the right time for them. If at all it happens, it may happen, in the fourth quarter, because I agree with you that the deflationary tendencies are very acute. But Lata, tell me honestly, I mean, RBI has already reduced policy rates by 75 bips, and, lending rates have come down by just 30 bips. So where all this conversation is heading us? The point is that I am seeing lot of resistance from the bank side to reduce lending rates, given the levels of risk premia and other concerns on credit costs and NPAs, etc. So I feel we are going to see more of financial disintermediation in the coming months, irrespective of the fact whether RBI reduces policy rates or not.
Gaurav, I know CPI inched up and firmed up yesterday, but considering that we've got the Iran deal and that will put pressure on crude prices, do you think going forward inflation will ease a little more and there is a possibility of a rate cut?
Well, I think inflation in the next couple of months anyways would come down quite sharply because of the base effect. But I think that is already accounted for. But I think the path of inflation, to my mind at this stage, I think from the numbers, extrapolating from the numbers of CPI numbers yesterday, I think the January number, headline number, assuming that the monsoon picks up and there is, it's well within the range of what IMD has predicted, or there is somewhat, the deficit, let's say, improves to some degree, we may actually see the headline closer to 6% by January 2016. And on the question of the impact of, one thing I want to add is that while this news is definitely positive, I think RBI would want to wait and assess the situation, one on monsoons and on domestic inflationary pressures, which of course on the manufacturing side continue to showing that pricing power of the manufacturing sector has been stalling. On the other side, I think as we saw last year with oil prices came down quite sharply, but RBI only acted in January. So I think RBI would, having kind of done already 3 rate cuts, and as Rupa rightly pointed out, the impact of transmission has been somewhat partial. I think there is scope for the transmission to improve as we get into, as credit growth picks up. So I think banks would be more willing to pass on once credit growth picks up. Okay. Because I think as you get closer to September, the concerns around Fed rate hike, because to my mind, I think September is the only month where Fed has the window of actually moving with a rate hike. Okay. So I think in the next couple of, I would say over the August and perhaps even the next meeting, RBI may still wait and watch and see how the situation pans out. Okay. And they do an intermittent rate cut if the situation warrants.
All right. Kumar, similar question to you. What's your sense about Reserve Bank action, and when would you, like Rupa and Gaurav, rule out a rate cut in August, but keep a hope open for late September or early October?
Well, yes, I think the August rate cut is probably a very low probability at this point in time, unless the RBI really has a very good handle on how the monsoon impacts food prices. It cannot probably really take a decision, so we'll have to only wait and watch for that. But yes, overall commodity prices are lower, and that definitely will help the RBI move rates in the coming quarters, if not in the coming months. And of course, bank transmission is very important, and that probably will be taken care by the RBI by providing adequate liquidity into the market.
Okay, Gaurav, Rupa, let's thank you on that note for joining us in this conversation and get